Welcome back. As 2025 draws to a close, Malaysia is ending the year on a notably stronger footing. The ringgit has climbed to its highest level in nearly 5 years. Investor sentiment has improved, and global assessments point to steadier fundamentals and clearer policy direction. In a year marked by global uncertainty from shifting interest rates to trade tensions, Malaysia's economic story has been one of recovery, credibility, and renewed confidence. And to help us understand better what's driving this momentum, I'm now joined by Dr. Carmelo Ferlito, CEO of the Centre for Market Education and faculty member at Universitas Prasetiya, Mulya. Doc, as we close out 2025, the ringgit is trading near 4.04 against the US dollar, its strongest level in almost 5 years. For international viewers, how significant is this milestone for Malaysia's economy, Doc?
Hi, good morning from me, good morning from Italy, and thanks for having me. I think it is an important point for external observers, but what will matter more in the future is how Malaysia will be able to keep this level in the future. Because what we have observed both in 2024 and in 2025 was an alternance of ups and downs for the ringgit, often in particular in 2024 due more to external factors and external speculation rather than the behavior of internal fundamentals. So now that the ringgit, in fact, has strengthened and I would say really developed its position when compared also to the regional peers, it is important for Malaysia to reassure and to keep this confidence in the next months to be able to fight for keep this level constant. Because for investors and observers, what is most important is not the value per se, but the stability of that value.
Now, Doc, analysts note that the ringgit's strength this year wasn't just about a softer US dollar, but also about improving domestic fundamentals. What changed most clearly in Malaysia's economic story in 2025, Doc?
I think that the softening of the dollar is an important element. I mean, the uncertainty of the American policy has played a role. But if we look at the situation domestically, what, in my opinion, has mattered the most is that some policies that were somehow in the air, like the rationalization of subsidies, has finally found an outcome. Maybe can be more or less than expected, but something has happened. So there is no more discussion about this, but this thing has been done, and now we know what we are dealing with. So I think that the materialization of certain announcements and therefore less talking and less expectations about that, because these things have finally happened, has contributed to stabilize also the behavior of the currency. Another policy has been, in example, the e-invoicing. We may like it or not, but happened, is there, and now we don't have to think what is going to happen in that direction, because the policy has finally been announced and implemented, and we all know what we are dealing with, like it or not.
Now, actions over words. Now, fiscal consolidation, including subsidy rationalization and clearer medium-term revenue reforms, has been repeatedly cited as a confidence booster. How important were these measures in restoring investor trust in the ringgit, Doc?
Yeah, I think that, as I mentioned, the fact that these policies were indeed implemented, and therefore there is no more discussion and uncertainty on the shape, on the actual way in which these policies are going to happen, is the most important factor. Somehow the government is on the right direction, but I believe that more can be done, in particular on the rationalization of spending. Something has been done on the revenue side, but where probably the battlefield in which the government will build its future credibility, I think, is on the rationalization of spending. On the other side, I think that somehow also the recent government reshuffled with some adjustments has played a role in building confidence. Some key roles have been assigned to people that probably been welcomed by the investor community.
Now let's look at the external factor. Malaysia's external position has strengthened, supported by exports, tourism recovery, and a wider goods surplus. How critical were these external factors in anchoring the ringgit's performance this year, Dong?
I think that they were very important because in a climate of uncertainty, indeed, there is always the risk that performances are disappointing or below expectations. And I think that the latest data on investment, exports, the economy per se, even GDP, has somehow caught the analysts by surprise, been better than expected, and this has somehow revamped expectations and sentiments on the Malaysian economy per se, which, when compared also on the international scenario here in Southeast Asia, I think has demonstrated to be more solid, more reliable, and more stable than what is happening elsewhere in the region.
Now, speaking of stability, credit rating agencies have reaffirmed Malaysia's sovereign ratings with stable outlooks, pointing to sound fiscal and institutional reforms. Now, why does this kind of policy credibility matter so much for currency stability, though?
These are very important because are judgments that somehow come from an external party. So people tend to look at rating, and I think often these ratings are overrated, with the idea that the analysts that produce these ratings are indeed external observers and therefore are more reliable than internal observers. So people, investors, the business community look at these ratings with expectations, and the fact that they are positive creates and boosts confidence. Although I think sometimes we have to be even a bit more brave and also dare to do policies when the rating agencies are not supportive of them. But indeed, the confidence is there. The external signals are in the direction of stability and confidence. So I believe that the government is well positioned to be brave on the reformist agenda for the next year.
Now, Doc, as Malaysia enters 2026 with global risks still in play, what needs to go right for the ringgit to hold or even strengthen beyond current levels? And what should policymakers be most careful about in closing?
I think that there is one level, which is the international level, on which obviously Malaysia in itself cannot do much. But domestically, I think what can be done is to keep on pushing on international free trade agreements. Malaysia has demonstrated in this period to be open to international trade agreement beyond the relationship just with the US and China. In example, through the negotiation with the European Union. This is an important factor where Malaysia needs even to be more aggressive, understanding that free trade is beneficially first and foremost for the population. And the second one, I think now that confidence has been built, trying to be more brave on the rationalization of spending, so reducing the way in which the government interfere directly in the economy, and try to implement some reforms that can address some structural issues of Malaysian capitalism, like, in example, the fragmentation, the multiplication of small and medium enterprises, and try to develop reforms that nurture consolidation to try to build a bigger role for bigger private firms that can somehow compensate the probably too strong of a role that GLCs, government-linked companies, have now in the Malaysian economy. So try to recalibrate that and build a bigger space for the private sector.
Thank you so much, Doc, for sharing your insight. We look forward to speaking with you again. Now, as Malaysia heads into 2026, the message from the markets is clear. Confidence is being rebuilt through consistency, discipline, and credible policy execution. The challenge now is sustaining that momentum in a still uncertain global environment. That was Dr. Carmelo, CEO of the Center for Market Education and faculty member at Universitas, Prasetiya, Mulya, sharing his insights on the ringgit, Asia's top performer in 2025. We'll be taking a short break. Stay with us for more global updates in just a moment. This is The World on Bernama TV.